You're watching The Big Question and I'm Tamanna Inamdar. The biggest question the world is asking right now is frankly one about the United States and its economy. In the last couple of days, we've seen Wall Street wipe out trillions of dollars in investor wealth because of one statement that could or could not collude to a possible recession in the world's largest economy. I'm talking about an interview President Trump of the United States had with a channel recently in which he was straight up asked the question, are you worried there could be a recession? Where have these fears from recession come from? It's starting with Trump's own policies, largely on the front of tariffs. The Trump government wants tariffs to increase in the United States, or they're using it as a tool to reduce tariffs that are levied on the US. This tariff war, this tariff fro and back is something that is spooking investors and hence the fear of recession. In fact, Goldman Sachs last week raised its recession bets from 15 to 20%, saying it saw Trump's policy changes as the key risk to the US economy. Now, why does the rest of the world care if there's a US recession? A recession in the United States is bad news for global growth, and no nation's economy will really be spared from it, including India, which is why the big question we're asking today, is the US heading towards a recession? To speak on this, I'm joined by Mark Farber, editor and publisher of the Gloom, Boom and Doom report, and I'm also speaking with Dr. Arup Rahat, chief economist, Asia Pacific at Oxford Economics, who is joining me from Singapore. So welcome to both of you, but I'll start the conversation first with Mr. Farber. Do you think that we're heading for doom as far as the US economy is concerned?
We've been in a doom scenario for most people for a long time already, because of course the financial media interviews people that have assets like I and so forth, and rich people, and for them life has become easier as we had a very high asset inflation, stocks moving up, properties moving up, commodities moving up. So rich people became richer. But if I measure the typical citizen in America or in the Western world, and for that matter, I would include India into that as well, the typical person, his income has maybe gone up, but his cost of living has gone up more than his income. So in real terms, he's actually not better off than, say, 6 years ago in 2018, 2019. And in the US, it's very pronounced that real incomes, inflation adjusted, if we take the right rate of inflation, not the one that is published by the government, because the government everywhere in the world has only one function, is to mislead the people. And the fact is simply, in America, the private sector economists that calculate the inflation rate at something like 10% per annum at the present time, and not 2.3% or 2.8%, is ridiculous. It is an insult against the people to claim that inflation is running below 3%.
No, so let me come back to the point, Mark. Could the United States actually be heading into a recession? And I ask this because, yes, okay, so no context also required. I'm asking this because this is top of mind, right? This is how markets are reacting, not just in the US, but globally as well. You're saying, yes, it is heading into a recession.
We are already in recession. The recession started last summer, in my opinion. But you understand, if you throw money at the system, you can claim that the economy is growing. But if you measure by how much the government debt is expanding and by how much the economy is expanding, we can see that the government debt has vastly exceeded economic activity. And so, actually, the country is in recession already, and not just in the US. In Germany, they're a little bit more honest. They admit that they are in recession. They're so dumb. They are proud to be in recession.
Okay, so what does that mean? You are saying that if the statistics were true, the United States is already in recession, Germany is already in recession. What does that mean for asset classes? You say in your latest report, the Gloom, Boom and Doom report, that the best is over for the darling of Wall Street, the Teslas, the Nvidias, etc. Is that what we're going to see more of?
In November, I wrote a report, the Trump top. Stock markets peak out amidst a wave of incredible optimism and great expectations and high valuation, high level of speculation, and high retail participation, retail people who have no clue about stocks. And the same has happened in India. In India, there's a huge wave of speculation that persisted last summer and so forth. And now the stock market has imploded much more than the index would suggest. The same happens now in the US. The US is the biggest bubble in history, both the debt market, the bond market, and the stock market compared to the real economy.
Okay, so a lot to unpack there. I'm going to come to the Indian question in just a bit, but you were saying that you talked about the Trump top. What are we seeing right now? Are we seeing the Trump bottom? Are we seeing the worst over? When you hear President Trump talking about tariffs day in and day out, then announce some, walk back on some, what do you think is going to happen?
I love Mr. Trump because he's truly clueless, but he's very convincing in what he says. And he changes his mind every 2-3 days, depending who walked into his office and convinced him of some new wisdom. I like these tariffs. The tariff idea is one of the worst economic interventions you can dream about. I mean, everybody in the whole world knows that it's going to be disastrous if each country introduces tariffs. It will kill the economy. But Mr. Trump is very highly confident that this will work out and it will make America great again. It's a complete joke. But the valuations in America are very high relative to the rest of the world. The US has a market cap of over 50% of the world's stock market cap. So I think the FANG stocks and the Magnificent Seven, they will go down and the money will flow out and go into depressed assets. Some of these depressed assets you can find in Europe, some in the mining sector, and mostly in emerging economies. And I think emerging economies will grossly outperform the US in the next 5 years.
Okay, so that's important because if I talk about emerging economies, and let me pin down on India, the flow has been in the opposite directions. All roads lead to America right now as far as global flows are concerned. You're saying that could reverse? How does the Indian market then look?
All flows lead to NVIDIA and Tesla, the two stocks in America. They're the darling of speculators worldwide, and then a little bit of Bitcoins. And now these flows are reversing. In fact, most retail investors have suffered colossal losses in the last 2 months. I go to bars every day. I can see before this implosion in the last 2 months of these stocks, NVIDIA, Tesla, and the cryptocurrencies, in the bars, 50% of the people were day traders who traded day and night in these instruments, and they made $50, $100, and they went drinking into the bars and so forth. And now the bars are empty. These people, these day traders, have all been wiped out. Wiped out. Same in India.
No. So one sec. Let me get to the India story. This is the second time you've alluded to what is happening with retail investors in India. What is your word for Indian investors right now in equity?
Sell if the market rebounds and get out. We are faced with a global bear market in assets that, in my opinion, will last for several years. Several years, in real terms, inflation adjusted. Now you print money, maybe it goes up, but it goes up less than the rate of inflation. And in India, the problem will be at some point the strength of the currency. The currency will continue to decline, the rupee, especially, and that I want to stress, especially against the price of gold, silver, and platinum.
No, so right now, what is your advice to investors? Are you saying look at metals, look at gold? And if you are saying the Trump trade is reversing, emerging markets are going to be hot, why not India?
Because whereas some emerging markets have been in bear markets for up to 10 years in Asia, you look at China, Hong Kong, even Indonesia, Malaysia, and so forth, these markets have been in bear trends for a long time, and they're now in uptrends. Especially, say, we have to look at the individual sectors. You know, the Western media has 10 years ago, they couldn't write more positive about China and Hong Kong and everything. And now you cannot find an article that is positive about Hong Kong, China. Everything is negative. So the Chinese invent something, the Western media will write it down. Anyway, what I want to say is India, in my opinion, is not yet near a low. I think it's peaked out, and I think for the next, say, 6 months, 1 year, the Indian stocks will not perform particularly well. However, I have to say, I have been a great supporter of your Prime Minister, Mr. Modi. He's a genius relative to India. He's brought the country forward by 20 years in, say, 60 years. The county administration, the county clan is a nest of vipers and thieves. They took money out of India, and what they've done, nothing in terms of development. For 40 years, they had a chance to do something for India, and there was stagnation and nothing moved forward. And the Modi administration, they've done that in 6 years. They propelled India into the modern world. Not everything is perfect. He's also a politician. Politicians, by definition, are arrogant and incompetent. But Modi is a shining light among the incompetent politicians.
Okay, very interesting. So on the basis of that, Mark, you're saying next 6 months is tough, next 1 year is tough. As an investor with a longer term, what is the India story looking like for you?
I've maintained for the last 20 years that I would rather invest in India, my funds, my assets, than in the Western world or in America. You understand? I'm a great believer that India can become not a rich country, but we've seen there are some people that have become very rich. And I think India can develop a large middle class, which drives economic growth for the next 5, 10, 20 years. But the stock market is not cheap, you understand? I'm a great believer in India. I'm not a great believer in the stock market at the present time.
that's important. So just a quick recap of this fascinating conversation with Mark Farber. Can the US go into a recession? He says yes. In his view, the US is already in a recession. And as far as India is concerned, he says more pain to go as far as the Indian stock market goes. Thank you so much, Mark, for speaking with us today. To speak more on the impact of a possible US recession, first of all, is there going to be a US recession? If there is, what is the impact for emerging markets like India? I'm speaking now with Dr. Arup Raha, Chief Economist, Asia Pacific at Oxford Economics. Dr. Raha, pleasure to have you with us here on NDTV Profit. Thank you so much for your time. Let me start with the core question. Do you think these fears of recession are a bit overblown? And let me tell you why I'm asking this. They are based on a half non-answer from President Trump to a question on whether there is a recession. It was literally him saying, we're in a period of transition. There was no yes, there was no, and now he's come out and said, no, I don't think so. So why this talk of recession?
Well, let's leave Mr. Trump aside for the moment because, reading his mind is above my pay grade. So we just talk about what's happening in the economy. Now, before he came in, and actually the markets have been discounting his coming in about a month before he actually got elected. Before he came in, the probability of a recession was, say, 10 to 15%. It has definitely gone up. Now, whether it has gone up to being a meaningful number or not, we don't know. But there are a couple of things that have obviously happened that you can observe in the markets. The US 10-year bond yield has gone up, which it's come down recently, but it's gone up from when the Fed first started cutting. So even though the Fed has cut by 100 basis points, the 10-year bond yield has gone up, which is quite rare because you'd expect that if the short end is coming down, so will the long end. So that has created a bit of a problem. The second is that the dollar has been very strong. And then on top of that, if you start throwing in tariffs, etc., and you start throwing in you can see that sentiment is worsening in the US. Businesses may not be willing to take medium-term investment decisions. Consumers may not be willing to spend. In any case, the extra money that the consumers had after in the post-pandemic era, that part has, at least for 90% of the population, that part has gone. So there is a degree of fragility here. Mr. Trump's policies have had a market reaction, which has put further fragility into the system. So I wouldn't go and say that there is, we think you'll get about 2% growth, but it's a moving target right now, given that it's being very much determined by the rhetoric, which in turn is affecting markets, which in turn is likely to affect the real economy.
Yeah.
So I wouldn't say you're getting a recession as yet, but the risks have definitely gone up.
No, so, okay, the point is that the whole question on a US recession has been going on way before President Trump came on the horizon, right? It's been a forecast for a while, got backtracked after a point. You did have a technical recession, I think, for 2 quarters because the economy has to contract for 2 quarters in a row to technically go into a recession. And then you saw this massive rebound. What is confusing, perhaps to viewers as well, but definitely to me, is that for the last, if I take off the last couple of months, we've only been talking about strength of the US economy and how that is stopping the Federal Reserve from cutting interest rates. What has changed? Has anything fundamentally changed at all?
Well, the Fed cut by 100 basis points before the last meeting where they didn't cut. What has changed is expectations about Fed rate cuts. Previously, the markets were looking at about, and I'm not talking about economists predicting, I'm looking at what the futures markets were predicting. They were looking at about 6 cuts this year. Now that's down to maybe 1 more. That's where we are. And most likely that cut, at least if the markets are right, is going to come in the 4th quarter of the year. So there's a fair amount that's changed, but that's largely changed. If you look at inflation, it's been rising for the last 4 or 5 months. Right now, it's probably going to be hitting a 3% number soon, which makes it difficult for the Fed to cut. As you rightly pointed out, the labor market has been strong, or at least the unemployment number has been strong, which also has made it difficult for the Fed to cut. So even when they started cutting at the first stage, they talked about it being a normalization rather than helping the economy out. So if you really believe that they will move to a normalization, which is what they will have to take their time about it, especially given that the latest sets of policy, the policy announcements, if not necessarily policy, is going to stoke inflationary pressures. And that's the Fed's, most central banks, that's the primary target. First control inflation, then we'll worry about growth. So that's where you are.
Okay, let me talk about tariffs. And you're right that deciphering what President Trump is thinking, what Donald Trump is thinking, is difficult. But let's be honest, it's what everyone is trying to do. Every market participant in every asset class, everyone right now who has no investments anywhere as well is trying to understand what he's doing. Does he mean it? Does he not? Is it bluster? Is it scorched earth theory? Does he want to push the US into recession so you can start anew? No one can quite understand. What are you making so far of what we've seen and heard on tariffs?
You're telling me no one's figured it out and you're asking me to interpret what he's saying. I think he sees tariffs as a primary economic weapon, right? Otherwise, you would not be going into announcing a trade war with your two closest partners, right? Canada and Mexico. And if you actually look at the numbers with Canada, nothing justifies imposing tariffs on them. If you take out energy, you actually run a surplus with Canada on the trade side. So nothing justifies it. But I think Mr. Trump sees this as a primary economic tool to get his way. His logic being that, look, you run large surpluses with us. But one can argue if the trade rules are unfair and you have surpluses, but it's not, by and large. And also, given the size of the U.S. economy, I mean, U.S. economy, say, we take India, for example, 5 times the size. We simply don't have the market for the same size of market for U.S. goods as they have for Indian goods. So you're going to get that. So I think the difference here is that he has really put, tariffs have become a common word, which something you hadn't used for years. You're now using it 20 times a day.
Yeah.
And he views tariffs as his economic, but he's backing off because he realizes that the tariffs are not paid by the exporting country, they are paid by the importing country. In other words, this is really a tax on his own consumers. It's also that there are value chains, the way things move. He backed off on the automobile sector because he realized that these things go back and forth several times before they actually, what are you doing? You're making yourself uncompetitive against the Japanese and the Germans. So I think at some stage, sense will prevail that this is a tax paid by Americans. Yeah. This is not going to really help American industry. There's really no benefit to doing this. You're trying to destroy, years and years of sort of economic efficiency that have been built up through value chains, etc. So I'm actually somewhat optimistic that a lot of the rhetoric that you've heard may get implemented for brief periods of time, but ultimately common sense will prevail.
The flip side of that is it's quite like the boy who cried wolf or the president who cried tariffs. You are then going to have a situation where nobody is going to take those threats seriously. Then he's going to have to come up with something more, right? This is just the start of a 4-year presidency. What does that then mean for emerging markets? What does that mean for the Indian economy right now?
Well, I think it's the President of the United States. You have to take him somewhat seriously. Right? Even if you don't take his each measure seriously, you have to take the rhetoric seriously because it affects markets. So it's not something that one can ignore, but you hope better sense will prevail. On the other hand, say, for example, there were 20% tariffs on China. They've increased it to 30%. Nobody expects him to back off that. He does. You have to recognize that he views tariffs as an economic tool. He does believe that trade relations are unfair. If other countries run a surplus, that means they're being unfair to the US, not recognizing that, there are different market sizes, etc. So I think this issue isn't going to go away. And he ran, one of the platforms on which he ran was that, they are being unfair to us on trade, I'm going to fix it. So I don't think this issue is going to go away very seriously. Yes, you're right. I think the markets will start taking the rhetoric not as seriously as before. And in fact, you're already seeing it, that, the pickup you had seen in the 10-year bond yield, that's come off.
Yeah.
The dollar strength has somewhat faded, etc. For India, people may argue that there is no direct impact because he's not, we worked it out. He's not really going to impose tariffs on India, although he's threatened that he will do it again.
Yeah.
So I think, and maybe it's not a bad thing if there's, he cut down some of our, tariffs on the US. They are one of the highest in the world, but it's not a bad thing. I think the real effect on India that's coming is the pressure that's because of the dollar strength, the pressure that's come on the rupee. And that may tie the RBI's hands in what they can do. We've already intervened a fair amount to try and keep the rupee somewhat stable, more stable than it would be. And I think that the pressure on the rupee remains. And as long as Mr. Trump's rhetoric, or at least to me, I think that the dollar stays strong, US bond yields stay high, the pressure on the rupee will remain. And that, in turn, will constrain what the RBI can do. I think that's the larger impact on India. The direct impact may not be there, but there is an indirect impact.
There is an indirect impact. Short answer to the core question, is there going to be a US recession? You're saying unlikely. Am I reading that correct, Dr. Raha?
You're reading that correct in the sense that I've said the probability has gone up. However, we are not there yet. The probability still remains lowish enough that I wouldn't worry so much about it. Yeah. Let's see how things play out.
Okay, and it is something that the world is worrying about right now, one way or the other. But it's a wait and watch situation, no doubt, as it quickly unfolds and changes. Thank you so much, Dr. Arup Raha, for speaking with us. And with that, it's a wrap on this edition of The Big Question. Thank you so much to all of our viewers for joining us. Tell us what you think of this topic and others that we have covered on this program. What else would you like to see us cover? Let us know. We're waiting to hear from you.